Jamie Rogozinski, who's the guy who created Wall Street Bets. He did find community. He found people who cared about him at a time when he couldn't find that anywhere else. Reddit was distinct because it allowed people to create their own communities and then govern those communities. One of the most interesting pieces of this puzzle is, of course, Robinhood. This was a place that really turned trading into a game. Everything that used to be serious in our culture has become a sort of source of reality television. You have to do more and more outrageous things to get attention. The internet has given us this world of like bifurcated outcomes where it's both really terrible and really great. People know more than they ever knew, but also do more stupid things than they ever did.
Nathaniel, welcome to the show. I'm so excited to talk about your book, The Trolls of Wall Street. I actually first discovered your work on a previous book you wrote, Digital Gold, and that was the first moment that Bitcoin kind of clicked for me. So first I have to say thank you for writing that book. But today I really want to spend all the time in this conversation going through your latest book. Before we get into the book itself, can you give listeners a little background about yourself and why you decided to write The Trolls of Wall Street?
Sure, and thanks for having me, Kevin. I was a reporter for over a decade at the New York Times, first covering the financial industry and then covering the tech industry. And really what I wrote about was sort of where those two things merged. And I initially got into this combination of money and technology through Bitcoin and cryptocurrencies. But as I continued following this world, what I saw over time was that there was a whole sort of universe of people, and particularly young men, who had been drawn into this world of money and online communities. And I realized that it wasn't being given enough attention. People were not sort of noticing that this existed. And, I could see it because I was in the middle of some of these new technologies. And then, you have obviously starting with Bitcoin, but, quickly that grew with online brokerages like Robinhood and then the online communities on Reddit. And so there was this whole world that nobody was really paying attention to. And obviously during the GameStop frenzy of 2021, people became suddenly aware of this. There were millions of people who were buying the stock and other meme stocks, and it seemed to sort of disappear afterwards. But what I noticed as I continued following this is that it was still very much there. There was still this world of young men who were sort of captivated by all this. And so this book is sort of my effort to understand that and document that, and particularly document how you got from the financial crisis. I started covering the financial industry during the financial crisis, right after the financial crisis, when ordinary Americans, ordinary people were totally alienated from the world of markets and money. And how you got, basically 10 years later to a world where money and markets were a part of pop culture, and that young people were sort of the most interested in this. So that contrast was really what animated this story and what made me want to dig into it.
I noticed that between the two books of yours that I've read, the Bitcoin book and then the meme stocks now, it's like I look at the characters in each book, and I see a lot of similarities. I see that in both cases these are kind of misfits on some level. These are people who are not part of the traditional financial system. They don't fit in, and they are playing a bigger and bigger role in finance now. I'm curious to hear you kind of compare and contrast the characters in your two different books. Just because, like, I don't think that the Bitcoin crew in digital gold would necessarily identify as a meme stock trader. And I don't think the meme stock traders would identify as Bitcoin maximalists, but I saw a bunch of similarities. How do you kind of compare and contrast the two groups?
Yeah, well, I certainly think that, I mean, look, this is a diverse pool of people coming from all different sorts of places. And so, it's certainly not one thing, but, and it's not one personality type or one archetype, but there are a lot of threads that run together and connect these communities, and in my view, sort of create one large universe of people who, largely young people who are thinking about money, thinking about new ways of approaching money and markets and trading, and the economy, really, and how the economy works. I think the Bitcoin story really begins with, as you say, a bunch of misfits back in the 1990s. Obviously, Bitcoin, the original paper was released in 2008, 2009 during the financial crisis, but that was an idea that had been brewing for really 2 decades, since the beginning of the internet. And it was a lot of people who were really into the internet, who saw the early promise of the internet, but also who saw the dangers and perils of the internet, particularly around the loss of privacy. So Bitcoin came out of a group of people who, were sort of misfits on two levels. One, they were into the internet when nobody else in the world was into the internet. They found a sort of comfort in going online and interacting online. And then even within people who were into the internet, they were kind of alienated from that. So there were these layers of alienation that I think bled into the creation of cryptocurrencies, this idea that we need a new system, a new kind of money. And I think that sort of way of thinking, that mindset grew, particularly after the financial crisis. A lot of people felt after the financial crisis like something had gone wrong. The system wasn't working. And I'm not sure why. And I want to understand. It seems like we need something new. And so there was that sort of broad mindset. But there was also this world of people who were finding a refuge on the internet, and finding a refuge with other weirdos and misfits on the internet, and kind of developing their own new culture and ideas. And I think, that's really where this universe of Wall Street bets and, these degenerates that have given us meme stocks and crypto and a whole lot of other things. So, these are sort of the beginnings of the foundations. There's a whole lot of other factors as well, particularly with young men. This was largely not a world in which to which young women were drawn, to which they felt comfortable. So, there's a whole other set of issues around young men. But these are the sort of issues that were swirling that I think laid the groundwork for this.
And why do you think that these outsiders in either the Bitcoin context or the stock trader context, they started to have this powerful role to play in financial markets? They've started moving markets in different ways, either creating new assets or changing the way existing assets worked. And I look back at the history of Wall Street, and it just, my impression is that it was, for the last 30, 40, 50 years, it was just all the Wall Street funds had the power, and everyone else was kind of like a secondary role player in markets. And it was kind of like power was concentrated on Wall Street. What changed there? Was it the financial crisis that opened up this ability for outsiders to contribute and to alter financial markets?
Yeah, I mean, I think there were a number of factors that happen, and it happened slowly. When Robinhood was released and when Wall Street bets first came around, they were not, these were just like fringe little things that Wall Street laughed at and paid no attention to. So this took time to emerge, and really you saw it emerge fully during the financial crisis. Um, and sorry, not during the financial crisis, but during the COVID pandemic, and in the years afterwards, until now. Um, but what made that possible? I think this on the sociological level, what made it possible was a feeling of alienation and distrust that grew out of the financial crisis, but that was exacerbated in the years afterwards by this new world of social media that both brought people together and tore people apart. And it was supposed to be a new system of trust, but it also kind of created widespread distrust. It was on the internet where conspiracy theories could really sort of blossom fully. They'd previously been this sort of fringe part of American life. There had always been conspiracy theories, but the internet suddenly, you didn't know what to trust. And so these new ideas could come out and reach whole new audiences. And you have these echo chambers where people could get into new ideas, get into strange new ideas, and kind of echo each other and build on each other. And so I think these these different elements of distrust and alienation, and then this world of social media in which all of this could kind of be stirred into this richer and richer froth. And obviously that the sort of financial ramifications of this, which is what I'm looking at, are just one of the elements of this. We're seeing it in so many other parts of American life. I obviously talk about how this kind of grew up intertwined with Trump, as Donald Trump as a presidential candidate, and the appeal he had and the appeal he was able to take on online. Obviously he was also somebody who, when he first came around, everybody just laughed. This is a joke. This is like comedy. But it turned out that there was something that he appealed to something much deeper that was growing up at that time. And so I think these things are all coming together at the same time.
I'd love to start at the beginning of your book where you highlight a lot of the troubles that particularly young men are facing today. And these are widespread troubles. This is like lower academic performance, difficulty getting well-paying jobs, falling behind their female peers in a lot of different categories. There's levels of like depression and addiction and
Suicide, yeah, I mean, it goes all the way up and down.
so I'd love to hear your thought onto as to how you bundle all those together and trace it back to the root. Like, where did these troubles begin for young men? Was there a particular time in which they separated from their female peers and started to see declines in these metrics? Where did it all begin?
I mean, that is a really deep question in which there are a lot of people who I think are doing better, who have devoted their lives to studying this. I think, the book that introduced a lot of people to these ideas is Richard Reeves's Boys and Men, which came out in the last few years and really thoroughly documented the many ways in which young men seem to have already fallen behind. And so Richard Reeves' book is a great place to go to sort of read the history of this. I think, you know, when you look at the stats on a lot of these things, when you look at high school graduation rates and college graduation rates, and the income level of young men and young women coming out of high school and college, and the number of friends, and suicide rate. I mean, these things. This is something that has been brewing for a while, and I don't want to pretend to be an expert on that, um, because there has been so much deep research done on this. I mean, I think, there are, some of the strands that come together in this are the fact that we've moved away from a sort of manufacturing economy and more physical, a world of physical labor in which the sort of strengths of traditional masculinity were rewarded. And we've moved more towards a world of, a service economy in which cooperation and emotional intelligence and things that are sort of more traditionally associated with women are rewarded. And so you have this sort of shift in the incentives in society that I think are the most, at the most basic level, what has laid the groundwork for this. But it's very complicated. I mean, it's what's amazing, obviously, and what's remarkable about this is that, 30, 40 years ago, I think in the minds of many, still, women were viewed as being at a disadvantage in school and being at a disadvantage in society. And obviously, look, still men hold most of the positions of power. And, if you look at the richest people in the world, it's almost all men. So it's not as though everything has flipped overnight. But when you look at younger generations, and particularly when you look at sort of lower income people in younger generations, is where you see this sort of manifesting most dramatically. And I think that, the internet has sort of both played into this, exacerbated, but also exposed this world, because you've got this whole world, this world that I think most people became aware of, or with 4chan, these sort of fringes of the internet where people who felt like they were being left behind could go and find company and sort of find community in their alienation, their feeling that they had been left behind.
Why are they seeking out internet platforms? And is anonymity an important piece of why young men are specifically migrating to things like 4chan and Wall Street Bets on Reddit? These platforms, why those platforms over either a like a Facebook group or a real world community, like for someone struggling, an alcoholic might go to Alcoholics Anonymous. Why are they not migrating to physical kind of points of refuge, and why are they online?
I mean, it's a good question, and I think there are a lot of deep, complicated answers to that. I mean, look, it's worth sort of starting with the character who I start with, is Jamie Rogozinski, who's the guy who created Wall Street Bets. And I thought, as I started learning about him, and getting to know him, he created this thing back in 2012. And it was just a few years after the financial crisis when he first created Wall Street Bets, this subreddit. And he had found his way to Reddit and spent hours, spent significant chunks of his life on Reddit, in large part because he himself was an alcoholic at the time. And he had gotten out of college and worked, but during the financial crisis, he lost his job. And he was one of so many kids at that time who loved Jon Stewart, and the way Jon Stewart sort of took down the elite, and the way that the elite had been responsible for the financial crisis. Um, and Jamie sort of had this alienation from life at that moment, and he um, he found solace, he found refuge in Reddit. And there are a whole bunch of reasons that was the case. I mean, he had been a very like socially adept guy growing up. He, went to college and had girlfriends and had lots of friends. But, as alcohol took a bigger role in his life, he didn't want to see those people. He didn't want to see their judgment and their sort of sense of like, what happened to you, man? Like that just isn't something he wanted to confront. And so I talk in my book about how he would just sort of bury himself away in his room when he came home at night and spend hours on Reddit, chatting with people. And the anonymity was really attractive to him because he didn't have to be himself. He wasn't happy with who he was. And I think a lot of guys who find their way into these communities aren't really happy with who they are. And so they don't want to be in the physical world where people look at them and can um, make their judgments about that. He wanted to be in this world where he, could hide behind a screen, and if there was an uncomfortable interaction, he could pull out of it. He could disappear. He didn't have to keep going. So there was there was a certain comfort in online communities that he got that you just can't get in the physical world. But it obviously comes with a whole bunch of baggage and a whole bunch of problems that exacerbate the problem, that led you to initially go to that online community.
So on balance, do you think that these communities are acting as a solution for someone's problem, or are they more just like a crutch that gives someone comfort but doesn't really address any of the underlying problems?
I it's a it's I think that is a question that's going to be answered for each individual. I mean, in the case of Jamie, um, he did find community. He found people who cared about him at a time when he couldn't find that anywhere else. And in Jamie's case, he emerged from this. He eventually kicked his alcoholism. He went to rehab, um, and started a family life. I mean, he got out of this, and I think there's an argument to be made that the community sort of sustained him until he was able to get out of this. He at least had something that some source of socialization and community and people who cared about him. Um, but I don't know. I think it's interesting to think about whether he might have had to find a solution sooner if it hadn't been for the online community. But part of the story of my book is the fact that young men need this, and oftentimes this serves as a sort of like starting point. These communities serve as a starting point to start making your way back up in life. It's a place where you can learn and find people to talk with and teach each other. And that's what happened in the early Wall Street Bets. I mean, for the first few years, this community, this subreddit, was this tiny little world that people that nobody knew about. I mean, it was a few thousand people were members, and it was mostly just a chat room where Jamie would gather and talk with his friends. Um, and it took time for that to emerge, but that chat room was a really deep source of connection for him.
I have a question about the imagine a parallel world in which these communities didn't have the anonymity. Would they still exist? Would they be a shell of themselves? Would they like how important is the role of anonymity to a Wall Street Bets or to something like 4chan?
It's a great question. I'd be actually interested in what you think. I think it's a pretty deep and important part of this. I mean,
Right.
Reddit was very different than other social communities because you really didn't have to say who you were, give your real name. Obviously, in other social media, Twitter, you didn't have to give your name, but many people were operating there with their real names, and there was the certain real world prestige and status that came from that. So there were a couple of these communities where anonymity was really deeply built into it. And I think that and 4chan was obviously one of them, and this idea of the anons. I mean, it was really deeply built into it, and I think that gave them a freedom to sort of uh, act out in ways that would have been much harder if that had been their real name. If only because you know pretty quickly people learn on Facebook, if you say something embarrassing, and you're applying to college, people are going to see that. If you're applying to a job, there was just enough incentive to not act out on those platforms that it stopped it to some degree. Although, I mean, this was a part of online life. I mean, anonymity was deeply woven into so much of the internet. But I think particularly on communities like Reddit and 4chan, I think it shaped what these communities became.
It's a really fascinating subject, and I kind of think there's probably a spectrum here where, on some level the anonymity can be important in certain situations, and then in certain situations you really want to verify someone's a real person and that their identity. And I guess one related question is, like, on balance, if we take anonymity on the internet and we say, is this a net positive or net negative for society as a whole? Is that something that we can even assess, or what's your view on that?
Yeah, I mean, um, I think that it was important for many people who didn't feel comfortable in their own skin. It gave people a freedom to talk about things that they might not have felt comfortable talking about. And I think that's been such an important part of the internet and the culture that's grown up on the internet. And there's something powerful in that, but it certainly is easy to see all of the drawbacks that have come from this and the way it's released this sort of bile and distrust and alienation that is now such a deep part of our world. And yeah, if from day one everybody had to register with their real name and travel around the internet with that real name, I think the internet would be a very different place.
There's one other component to the Wall Street Bets community that is an interesting piece here, and that is moderation. This is not like Facebook or Twitter, where it's like the entire company is moderating things. There's a set number of people on each subreddit that get to make decisions on what stays and what goes, and how the kind of front page looks. And in your book, you highlight how the challenge of dealing with this task of moderation for this whole, there was a group of people who were moderating Wall Street Bets, but as they got a ton of traffic, like absurd amounts of traffic, they had various issues, and there was a little bit of infighting, and trying to figure out how to maintain this community as it scaled, how to avoid manipulating markets, how to avoid all the bots that were flooding the platform. And all of them were kind of volunteering to do this. This is like, it struck me as a really unique way for a social platform to be set up. um, and they seemed all understaffed and unprepared. And so my first question is, like, why do we get to the point where these really large communities are in the hands of volunteer moderators to begin with? It seems like that's, there should be someone who's an expert in charge.
Yeah, I mean, look, Reddit was distinct because it allowed people to create their own communities and then govern those communities. I mean, this was different than other social platforms, as you point out. And you know, Reddit was built around, it was not one place. Twitter is in large part, it's one platform where everybody's speaking into the same public square. You know, Reddit was built that it's divided into these subreddits that mostly their members created. Initially, the company created many of them, but or created some of the early big ones. But pretty soon this became a place where it was member generated community. So it wasn't just social media was about member user generated content. Here, even the communities themselves, the places where people gathered, were created by the users. And so Wall Street Bets was created by Jamie Rogozinski back in 2012. And part of what happened when you created a community was that you got to be the lead moderator. You got to be the one who made the rules and called the shots. And that was, I think that harkens back to almost this American idea of these like self-governing colonies of a sort where people, it's like the early American colonies where each state got to make their own rules, and they were sort of experiments. I mean, it's a very almost American idea that you are self-governing. You're in charge of yourself. You make the rules. You figure it out, and then you pay the consequences. And Reddit, this worked on Reddit. These really strong communities with a really strong sense of identity grew up on Reddit because people felt like they were in charge of the experience. This wasn't like Facebook, where Facebook would come in and say, "Oh, you can't, this kind of post is not allowed anywhere on Facebook." Reddit really shied away from that. Over time, this came with a lot of problems, and Reddit did try to step in and did try to sort of impose some order on some of these communities as they became more unruly. And that is, in fact, a big part of the creation of what becomes known as the manosphere. What this angry sort of alt-right energy that grew up on Reddit, what grew up there in no small part because they'd been given total freedom, and then Reddit came in and sort of imposed rules and said, you can't do this, you can't post nude photos, you can't have racist, toxic, certain kinds of toxic content they tried to do away with. And there was already such an idea that people should have freedom on the internet that this alienated people, got people really angry, and made these communities, this sense of community, cohesion, but also alienation, even stronger. And so this moderation was such an important part of what happened on the internet and what happened with Reddit, and particularly what happened with young men. I mean, these young men who were feeling alienated and feeling like this was their one refuge in the world, and then Reddit comes in and tries to impose rules on that. I mean, it just created this really toxic situation in which all of the problematic dynamics were just sort of amped up. And despite that, Reddit has continued to be a place where people go to create these online communities, and there's a lot of wonderful, harmonious communities there, but there's also a lot of ugliness that's grown out of that.
Do you think we'll continue to see a spectrum of management systems for these communities where it may not be like a one size fits all approach to social media? We may have people who decide to build platforms like Reddit where individuals can kind of moderate and maintain their own communities. We may have on the other end something like a Facebook where it's like a top down approach to you can't say these certain things. And we'll have other communities in between, similar to how we have like a political system where we have every different country has their own policies and rules of how they govern? Or do you think we'll eventually have some blanket approach to social media or some framework that every platform abides by to kind of like maintain cohesion online?
I mean, it seems like the big platforms have already sort of cemented their position in our social media landscape, and they part of what makes each of them attractive is the very different philosophies to moderation that they're bringing. I mean, obviously, that is evolving over time as you see the creation of something like TikTok that has become so big so fast and brings a totally different idea of community and engagement to social media. And then Twitter getting taken over by Elon Musk and taking a very different approach to moderation than it did in the past. So these things evolve, but it does feel like there are just these different ways of interacting online that people prefer, and there are going to be communities to serve all of those different ways of interacting.
Let's go through the background of Wall Street Bets, the community, and kind of give listeners a sense for how this community. We talked about the early days of Jamie founding it. How did it grow? What were the catalysts along the way that got it to? I think everyone listening in remembers the 2020 2021 craze, but how did it get to that point?
Well, there were several steps along the way. And I mean, one of the most interesting pieces of this puzzle is, of course, Robinhood, this new kind of brokerage that offered a different way to trade and an easier way to trade. I mean, essentially, Robinhood came along in 2015. That's when the app, late 2014 is when the app was first released. And um, at that point, Wall Street Bets was just this chat room. It was little more than a chat room. It had been around for 2 years, and Jamie found this community of 10, 20 guys who he really liked, and they would talk in the chat room. But the subreddit didn't seem to have much chance of survival. And then Robinhood came around, and people responded really interestingly to this new app, which was unlike any brokerage that had come before. This wasn't a place where you were supposed to research stocks um, and make your picks and then stick with them. This was a place that really turned trading into a game. It was you opened it and there was a big green button that said buy, and within 30 seconds you could own a stock, and then within another 30 seconds you could sell that stock. And all of the notifications on the app were uh, were aimed at getting users to do something, to take action. And this is not how brokerages had acted. This is not how brokerages were designed previously. And, pretty quickly, young people who were used to Tinder and Uber, saw something in this app. At this point, most Americans were still feeling the overhang of the financial crisis and were not interested in trading. And Robinhood came along, and suddenly young people were like, "Oh, this is fun. This is not like some investing for my retirement. This doesn't feel like some responsibility. This is like opening Candy Crush." And it is even more addictive than opening Candy Crush, because pretty quickly you have your money in there and you're watching your money, grow or shrink. And you can open that app, as many times a day as you want, and track this. And it brought out a different way of thinking about the stock markets than you'd had before. You'd obviously had this moment of day trading excitement back in the 1990s during the dot-com bubble. But this was a new way of this offered a new way of thinking about the markets. And very quickly, people who found the app also found Wall Street Bets, found this sort of irreverent place where people were making jokes about losing money. I mean, it all just sort of fit together so nicely. And very quickly, Wall Street Bets suddenly started to take off. It had been this chat room for 2 years. It had been almost dormant, and suddenly this attitude that Jamie had introduced to Reddit, it like jibed with this new brokerage and this new way of trading stocks. And so you saw pretty quickly Wall Street Bets take off. And Jamie, this was actually right after Jamie had gone through rehab and was emerging from the alcoholism and sort of alienation that had led him to create this. But suddenly that was because he had found that he had created this unlikely thing that appealed to this whole crowd of people who'd found Robinhood and were getting into stocks for the first time.
To what degree were the lockdowns in COVID a catalyst for this community's growth? Because I think a lot of people associate Wall Street Bets and meme stocks with stimulus checks and lockdowns.
Yeah. Well, it was it was in 2020 that this community first passed 1 million members. You know, it had been growing since between when Robinhood was created in 2015 and 2020. Um, it grew slowly from 30,000 members to 1 million. And there were a bunch of stages along the way, but it was really when COVID hit that this reached a whole new level. And people were stuck inside. They had all their previous forms of entertainment, sports, going to restaurants. Suddenly, they couldn't do any of that. Um, and this idea that had sort of been germinating on Reddit suddenly just went global.
A lot of the early conversations on Wall Street bets were people laughing at themselves for losing money. Why did that? Why did that become the preferred method of entertainment during lockdown? To join a bunch of people who were losing money gambling? Like, why that over some other pursuit? I know some people were taking up sourdough bread baking and all sorts of other activities, but why gambling and why stocks?
Well, I think that there was this. I think you have to go back to this alienation and distrust and this irreverent sort of culture that had grown up on the internet in the previous 20 years. This idea that you were going to do something that wasn't the sort of societally improved way of doing things. I mean, that was so deeply built into the Wall Street bets culture. We didn't talk about it, but coming out of the financial crisis, there was a sense that the smart way to invest was to put your money in an index fund that owned all the stocks in the S&P 500 and just let it sit there. And that's how you're supposed to invest. That's how you're supposed to put away money for your retirement. And Wall Street Bets had this totally different idea, which is like, no, I that's boring. I know that's what you want me to do, but there's no fun in that. There is and so doing this trading was a way of sort of like flipping people off. It was just a way of like, I'm going to do my own thing. I don't care. And that was attractive online. I mean, there's so many sort of deep roots beneath this, but to some degree it goes back to the TV show movie franchise Jackass, where people are hurting themselves for entertainment, and there is something fun about being a jackass. There's something entertaining there, and I think part of that goes back to um, the attention economy of the internet. The internet is this place where you have to do more and more outrageous things to get attention. And Wall Street Bets really amped that up. It was this place where you could go to do something crazy to get attention, but you had to do something really stupid if you wanted to outshine all the other jackasses on the internet. And I think that 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 speaks to some degree to the desperation of people who are stuck at home and eager for that attention. It's like when you've lost everything else, what else are you going to get except you know likes and upvotes on Reddit? And so I think there's some degree to which this speaks to desperation, but there's also on the flip side, this is that desperation grew out of a financial situation in which people wanted to get rich, and they imagined this felt like a place where that was possible. And if you didn't get rich, at least you'd get a few more followers on social media in the meantime. I mean, we didn't talk about this. The other piece of this we haven't talked about yet is crypto, and the way that crypto kind of rose up in these bubbles in 2013 and then 2017, again in 2020, 21. But that kind of showed the world this possibility that people who knew nothing could get rich essentially overnight. That's what it felt like during those crypto bubbles, that, 17-year-old, 18-year-olds were getting rich overnight.
Hmm.
Um, and so all of these things came together. There was, the desperation, that window into people getting rich very quickly, and then this sense of community. Stocks were something that you could come together online and talk about with your friends, and talk about with online community on Wall Street Bets, or on Twitter, or on StockTwits, or just your chat group of friends. I mean, it was a place it was a thing you could talk about and come together around. And by the way, at the end of the day, it was also kind of interesting. There was substance here. There was something more than just who scored more points in the basketball game yesterday. There was like, what's the Fed going to do? What is the Fed? How do I understand the economy? And so there are just all these layers, from like the lowest instincts to these somewhat elevated ideas that were quickly getting drawn in.
How did we go from, in the early days of Wall Street Bets, people sharing how much money they lost, kind of individuals just sharing their own experiences, to what seemed to emerge in the later stages was like people banding together, backing individual companies and trying to swing markets together? How did that, like, isolation in the early days turn into bands of people working together at the end?
I mean, from the early days of Wall Street Bets, I think you saw meme stocks emerging. I mean, people began talking about meme stocks all the way back in 2015, right after Robinhood came around. The first meme stock was AMD, the chip maker, which was the most talked about stock on Wall Street Bets back in 2015, even though it was a pretty, it was a small company, and yet everybody found their way to it because it was a sort of like, it became this stand-in. It became like a mascot, or like a sports team that you could root for. And AMD was this underdog that was behind in the chip industry. It was behind Intel and Nvidia, but it was this sort of underdog you could root for, and that grew up very quickly on Wall Street Bets, because this is the natural dynamics of social media, is this sort of herding instinct. People start talking about it, and it's funny, and it just generates more conversation, and you kind of want to be in on the joke. I mean, that's the idea of the meme. Is it's this sort of joke that you don't quite understand, but that you want to be in on. And meme stocks quickly, you saw it first with AMD, and then over time, the number of names that got added to that grew. Tesla, right before the pandemic hit, Tesla exploded on Wall Street Bets, and you had a bunch of overnight millionaires on Wall Street Bets from Tesla's first sort of big rise. And there were, again, so many different elements in Tesla's rise. Elon Musk was this sort of man boy who appealed to this crowd because of his own irreverence, his own sort of middle finger to the institution. He was fighting against the Wall Street shorts. He was willing to say irreverent things on Twitter, and he naturally appealed to this community, and they kind of pushed that stock up. That was even before COVID. That was sort of the first time when this community realized, like, oh my goodness, when we come together, when there's a million of us on this community, and we all decide to buy one stock at the same time, particularly when we all decide to buy options at one time, which we haven't talked about, but there's this real power that the community discovered in options trading.
Mm.
We have the power to push up a real stock, and by the way, if we time it right, to get rich in the process. And so that was that idea began to grow, long before GameStop came around, and it was like this sort of iteration and experimentation that you saw on the community in the community as they realized like, oh wow, we have real power if we exercise it in the right way.
Can you talk about how that power kind of grew over the from Tesla up until GameStop? How people started to take action on that newfound power that they could actually swing financial markets, and then what are some of the consequences that the community started to have to deal with once they realized they were in fact moving markets?
Yeah, well, as I mentioned, I think one of the strange arcane elements of this was the importance of options, and options are, you know, the sort of risky cousins of a risky cousin of stocks, where they allow you to bet on where a stock will be in the future. Will it be higher than it is now or lower than it is now? And it's sort of a leveraged gamble on the price of a stock. And most options end up being worth nothing. So you buy an option, and if the price doesn't go where the options contract says it will go, you lose your money. And this was a sort of amped up version of the kind of trading that was happening on Wall Street Bets, and it took off. And of course, it took off in part because Robinhood introduced this and encouraged users to try options trading. But it turned out that with options trading, if people sort of banded together and all bought options at the same time, you could set off this effect in the markets where Wall Street firms essentially had to start buying the shares and push up the price. And this is what happened with Tesla. This was what was known as the gamma squeeze. And it was these weird um, financial dynamics that these kids who were gathered in this online community suddenly realized they were taking advantage of. And it was this strange moment in which all of the weird contradictions of this community, you know, they were being idiotic, but also they were like figuring out these complicated dynamics of the financial markets that even hedge funds didn't seem to understand. And you know, it was this weird meeting of high and low, and it was part of what became so appealing about this community was like they actually seemed to understand something. They seemed to know something that other people didn't know. They seemed to be in on some like secret to how financial markets worked. And that really took off during COVID. You saw this with stock after stock where they realized, like, oh, if we all buy these options and then also buy shares at the same time, we can really start moving markets. And it became this, again, a sort of like jackass competition of just like how much mayhem can we set off in the world. There was this like chaos factor, this desire for chaos that emerged from this. And you know, it sort of took off over COVID. You saw it right before COVID with Tesla, but it sort of grew from there. And you saw, you know, them betting on cruise companies and airline companies when everybody on Wall Street was betting against those things. Wall Street Bets was betting for them and pushing them up, and it almost seemed as though it was pushing the whole market up. I mean, you know, you had this crash when COVID happened, the stock market crash, but then this crazy recovery that nobody anticipated, and it was these young people who were taking advantage of it and making money off of it. And it was, you know, again, just all of these bizarre elements coming together. But there was something about, this online world that made that very compelling and interesting and drew in more people and, you know, got us eventually to GameStop, where you had, you know, overnight Wall Street Bets grew from 2 million to something like 8 or 9 million in a matter of weeks as everybody sort of fixed on this one stock and really pushed it, you know, out of the stratosphere.
And how did the hedge funds, the regulators, even the trading platforms like Robinhood step in and kind of combat this newfound power to swing financial markets?
I mean, the reality is nobody ever really did step in. The regulators just kind of watched this befuddled. It all happened too fast, and it was all too new for the regulators to know what to do. So the regulators never really did take action on any of this. The hedge funds. Um, there is a sort of conspiracy theory slash suspicion in online communities that hedge funds, you know, tried to step in and basically shut down trading. And this all came together when Robinhood stopped trading in GameStop on the day when or the day after it hit this peak. Robinhood basically said, customers, you can no longer buy GameStop. You can only sell your GameStop shares. And, this was this moment, this day when every TV station in America was talking about these kids who had driven the price up. And suddenly Robinhood stepped in and said, you can't trade this anymore. Robinhood was this company that was all about democratizing the markets. Robinhood had said, we want people to be able to trade. We want we're Robinhood. We're taking from Wall Street and giving to the young, poor people of America. And had been their message. And suddenly they said, sorry, young people, you succeeded. The stock went up. You all got unexpectedly rich, and now we're going to shut this whole thing down. And there was a sense, there was an immediate assumption on Wall Street Bets and elsewhere that the hedge funds must have done this, because the hedge funds had been shorting GameStop, and these young people were making money, and the hedge funds were losing money. And there was this assumption that these hedge funds must have come in and told Robinhood to shut the whole thing down. And Robinhood did shut the whole thing down. In retrospect, when sort of government authorities looked into this, they found that the hedge funds had not, in fact, ordered Robinhood to do this. This whole thing, Robinhood had taken these steps, had shut down trading, in large part because they just lost control of their own systems. There was so much trading that they didn't have enough money on hand to basically pay the regulators. It was this very sort of technical issue, but it was in large part because Robinhood had not prepared for this moment. There were a number of moments in my book that I talk about where Robinhood just was totally unprepared for what they had created. Robinhood was a very sort of Silicon Valley story where they put all of the emphasis on growth and finding new customers, and they did not sort of use the money they were getting, use the investment they were getting to build a stronger platform. They kind of had this like patched together platform that would sort of fall apart whenever there was any real pressure on it. And so that is what led to this shutdown in trading. And that set off this whole new world of conspiracy theories and, people who sort of took up GameStop as a sort of political cause and political and social cause, in order to get back at Robinhood, in order to get back at these hedge funds. It was just this crazy swirl of things that is almost too complicated to explain. But again, it was almost the very complicated nature of this that made it so appealing and that allowed this community to continue to grow and expand around it.
It seemed like everyone in this story was unprepared. Like the individuals on Wall Street Bets were unprepared for the amount of money they would both gain and lose. The moderators on Wall Street Bets were unprepared to deal with all the new traffic and all the bots. And then Robinhood was unprepared to deal with the actual infrastructure of managing these markets and making sure they stayed, they were working. Is that fair to say that there was essentially no one prepared for this?
It's hard to think of anybody who saw this coming. um, and to some degree, this is just like the speed of the internet is faster than the ability of humans and human society and culture to keep up with it. Like the ability of something to grow, like virality is just not something humans are prepared to deal with. And I think we saw that in the GameStop moment.
So we're filming this episode. It's May 16th right now. And this week, we just had another kind of awakening moment for GameStop where Roaring Kitty kind of came back to Twitter, and the stock, GameStop, went from $17 a share to about $80 a share in a matter of a couple of days. It's currently now down to about $29. How confident are you that the 2020, 2021 meme stock craze was the meme stock craze and not just a stepping stone towards a bigger one? Are we headed for something even bigger in the coming years?
I think that the meme stock moment, that GameStop moment, was a crazy anomalous moment that is relatively unlikely to be repeated. But what has happened since then, I think in some ways, the meme stock moment and meme stock craze has distracted from the bigger thing that's happened here. And that is this new interest in money and trading in the markets that is way bigger than meme stocks. Meme stocks, I think, are sort of like the attractive teaser that gets people in. What's so interesting is that once people get in, they stick around, and usually when they stick around, what they do is shift away from meme stocks into other parts of the markets that are often still very speculative, but often people sort of, this is this starter dish that leads people into a broader engagement with the markets. And that is what you've seen since COVID. I think there was a sense that all these people flowing into the markets were there for the memes and there because they were stuck inside during COVID. And people assumed it would just disappear after, the pandemic ended, people went back to work. But what's been so fascinating is to see how young people, have kept their interest in the markets and kept their interest in these online communities. And the online communities are evolving. It's not just Wall Street bets anymore. There are Discord communities. There's millions of Discord community. Well, there's millions of people in Discord communities talking about stocks, talking about investment strategy. And so, the meme stock moment, I think, is, you continue to have these little flare-ups of meme stocks along the way. And this latest flare-up of GameStop was one of those. But that's not, I think, where the action really is anymore. I think the real action is in young people being engaged in the markets and finding this whole world of money and trading interesting. It continues to be this sort of entertainment that I think is surprisingly engaging and even educational in a way that people, I think most people who aren't involved in this don't sort of realize it. But there is just this whole world of particularly young men who this is still this sort of core part of their lives in the way that didn't really exist in the past.
To what degree do you think inflation is causing young people to search for these, speculative financial assets? I know in the Bitcoin community, the Bitcoiners might say that when you corrupt the value of the dollar, you kind of force people onto the risk curve further and further out, looking for more and more speculative things to invest in just to maintain your wealth because your dollar is no longer holding its value. is that a theory that you kind of stand behind it, or what's your view on the role inflation has to play here?
I mean, it's interesting because inflation has, I think, it's sort of worked uh, for a long time. Inflation was it was understood to be quite low, at least according to the official statistics. You had really low interest rates, um, and that was viewed as the reason that everybody was taking risks. When interest rates are low, if you put your money in the bank, you're not going to get anything. So you need to do something to get a return on your money, and that was why the government tried to keep interest rates low for a long time. They wanted people to take risks, and they got it. I mean, that is really the story of the decade after the financial crisis. Is you had really low interest rates, and that led people to take risks that they might not have taken if interest rates had been higher. Now the script has flipped, and we have higher interest rates. Inflation has ticked up. Official inflation has ticked up. The Fed, the Federal Reserve, has raised interest rates, and you would think that when interest rates are lower, that people would actually feel less of a need to take risk because they can get a nice return just putting their money into the bank or putting their money into bonds, safer bonds. But that's not what has happened. That risk seeking instinct that we had under low interest rates has just kept going under high interest rates. And I think, maybe, yes, there's an argument to be made that because interest, you can get 4 or 5% just putting your money into the bank. If you want to do better than that, you have to take even more risk. That's not usually how financial theory would lead you to think people would behave. But I mean, there are so many complicated factors at play here, but I think sometimes it just comes down to like the entertainment factor. Like social media has turned everything into entertainment. I mean, the presidential election is in large part a sort of new form of entertainment. Like everything that used to be serious in our culture has become a sort of source of reality television. And I think there's some degree to which that's what's also happening in the financial markets. It's sort of gotten wrapped into the financial entertainment complex.
Mm-hmm. And one thing I'm noticing now is that gambling is not only isolated to financial markets, but it's also entering into things like political elections. You can now vote on who you think is going to be the president, and you can earn money for it. In sports as well, sports gambling's ticked up. It's become legalized in a bunch of different jurisdictions. And my question to you is: are we in danger of becoming a society of unproductive, degenerate gamblers, or does this eventually just kind of work its way through the system and we just have to naturally like let it come and let it go?
It's a great question, and I mean I do think that the rise in gambling as part of mainstream culture is not something that anybody saw coming. I mean, yeah, the legalization of sports gambling has um, made that incredibly widespread. It's sort of now wound into sports culture. I mean, I think I have sort of looked at this and thought that in that context where you can choose between gambling on sports or gambling on the financial markets, I do feel like financial financial markets are less of a zero sum game than sports gambling. I mean, sports gambling, the house always wins, and there's only the same amount of money goes in that comes out. In the financial markets, you at least have people investing in real companies and learning about the economy, and you do see people who enter this world of sort of degenerate options gambling, and they come out the other side as interested in economics, or working for a bank or a hedge fund. I mean, there are all these stories in my book of people who got a real financial education through this world. And so one of the consequences, I think, of this is that you have a young generation that understands the economy and the markets in ways that previous generations didn't. When you bought a mutual fund or an index fund, you didn't need to know anything about the economy or the companies that were part of the mutual fund. You just bought it and sat on it, and you never needed to do any research. This new world encourages people to actually learn about things. And so, I think you always get this. The internet has given us this world of like bifurcated outcomes where it's both really terrible and really great. People know more than they ever knew, but also do more stupid things than they ever did. And I think that is the world we live in right now. It certainly seems like the world we're going to live in for the near future. And I don't know what's going to end it.
There was an interesting quote on designing a market, and this is more like a regulatory point, but you quoted Larry Summers in your book. He said, this was in 2021. He said, "I suspect our markets will survive social media, but this points to a need for a regulatory system as modern as the markets." Looking back now, a few years removed from all this, do we have that regulatory system in place? Do we have a market structure that is set up for the age of social media and the age of gambling, or have we made any progress towards that?
I have not seen any progress toward that. I think regulators are still scrambling to come up with basic, the most basic response to this whole craze. And I mean, I think regulators just move too slowly. I think what has happened instead is that markets have responded. The the meme stock craze was often about targeting heavily shorted stocks, aiming at hedge funds, trying to bring down hedge funds. Hedge funds have figured this out and have realized, you do not pile into short bets against companies. That is inviting sort of, this response from this online crowd. So, markets are responding even if regulators aren't.
I want to finish this off with a discussion about the creators of Wall Street Bets. And in kind of the end of your book, you talk about how the guys who really put in the effort to moderate this and tried their best to be volunteers and foster this community, they kind of got nothing for the community. They were not making a ton of money at all from there was no subscriptions, there was no ad sales that they were earning from. So they were volunteers essentially. And by any other, had Wall Street Bets been its own company and had its own platform that was separate from Reddit, this company surely would have been valued at tens of millions, hundreds of millions of dollars. Like, it was getting hundreds of millions of page views. It was like one of the most popular places on the internet. What do you make of that? Is this like, do you think we are trending towards a place where the creators themselves are going to be demanding more of an economic interest in the things they create? Like, no one really makes money on Facebook right now or on Instagram, but like directly from the company. Of course, you can get brand deals and stuff, but it feels like creators are on the short end of the stick.
There is a world of creators. There is a world of influencers who make money, but it is again this sort of bifurcated world of the internet where a few people do very well. Mr. Beast does very well as a creator and influencer on the internet, but most people are just scrambling to get attention, and they're not making any money. And I think that was very much a part of this story. I don't think that there's been any shift towards creators or influencers in a broad sense doing any better over time. the people who have captured most of the upside from this have been the social media companies. Reddit IPO'd this year, and they are the ones who are making money from the enormous amount of data created by all the users of that platform. I think the flip side that you could look at here is that people who were using that platform got something out of it. Even the people who created Wall Street Bets, who didn't make money off of it and spent hours, as essentially volunteer moderators, what they got is a sense of, the people who didn't make money from trading or didn't learn how to trade, which is one kind of sort of positive outcome from this whole thing. They got a sense of meaning, they got a sense of community, and they got a sense that they built something and made something, and that was possible because of the work to some degree that Reddit put in. But they didn't really make any money, and that's hard to avoid.
Do you think that there should be a requirement for these platforms to pass on some of the revenue to the people who are creating the content? Like, it kind of strikes me as if we step away from online communities and we think about the role that these moderators played, it's essentially like an unpaid internship at a company. It's like, the intern complains, well, you didn't give me any money. And the boss says, well, you got experience. Like, you had some fun. You met new friends. Like, and the guy's still upset that he didn't make any money.
Right. I mean, social media has turned the whole world into a stable of unpaid interns to some degree.
Right.
We're all just unpaid interns for the social media companies.
And do you think that changes over time?
I see no sign of it so far. I mean, there need to be platforms that compensate people who make that a part of their business appeal. And maybe the closest we've come to that is OnlyFans, but you don't really see that rising up as a business model. I mean, TikTok, which is the latest to come onto the social media scene. I mean, there's certainly people who've made money there, but I don't know that it's a higher proportion than there were on Instagram or Reddit or anywhere else.
Okay, final question for you. What was the most surprising part of this research that you put in to study the Wall Street Bets community and all these people who made a ton of money, lost a ton of money, participated in this community? Was there anything that stood out as really surprising?
I think around the GameStop story, there was that's a couple of chapters in my book, but that is a really interesting chapter to me, in part because these people have been memorialized as dumb money. But what I saw in reporting out my book, and what the story I tell in there is this very coherent and well-formed community that was really doing research on GameStop and learning things about GameStop that the hedge funds who were shorting GameStop didn't know. And so in the end, you had this moment, this week or two, where everybody in America was throwing their money into GameStop and hoping to make some money, and they didn't know anything. But there had been this year that had sort of laid the foundation for this, where you saw this incredible sort of crowdsourced research effort that that really figured out something interesting about how GameStop worked, where its position was in the market. And so again, there's this idea that this was the dumb money, but so many times in the book the dumb money ended up being much smarter than anybody understood or assumed. And that contrast really stays with me.
Thank you so much for taking the time today. I thoroughly enjoyed the conversation and the book. We'll have a link to your book in the description. Any final words or places that people can go to learn more about your work?
You can go to my website, nathanielpopper.com. I'm on Twitter at Nathaniel Popper. But thank you so much for having me, Kevin.
Thank you.